Welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're getting into the real financial backbone of funded and prop trading, how to maximize your payout. Because let's be honest, making money in a funded account is great, but keeping more of what you make, compounding it smartly, and managing your capital strategically, that's where real, sustainable income starts. So, in this episode, we're talking about profit splits, scaling plans, strategic withdrawals, and how to treat your funded account like a professional income stream, not just a trading sandbox. Whether you're just getting funded or managing multiple accounts, this is an episode you'll want to revisit every quarter. Let's jump in. Profit splits. Not all are created equal. First up, the famous or infamous profit split. Prop firms make their money by splitting your profits. And these splits can range anywhere from 50-50 to 90-10 in your favor. Some firms even offer 100% payout on your first withdrawal, up to a certain amount, usually something like $5,000 or $8,000. That 100% window is a gold mine, but only if you know how to use it. Here's how to play it smart. Target that first 100% payout aggressively, but with controlled risk. If you're offered full profits up to $8,000 in your first month, go for high probability trades early. Don't cash out in small chunks. Wait until you hit that max threshold to withdraw. You want every dollar under the 100% split to go to you, not the firm. Track your progress. Know exactly when your payout structure shifts because that 100% doesn't last forever. Negotiate if possible. Some firms will offer better splits if you're consistent, trading multiple accounts, or scaling quickly. But you won't get it unless you ask. And let's not forget, percentages aren't the whole picture. Some firms sneak in admin fees, platform charges, or withdrawal commissions. Always read the fine print. Scaling plans, your real long-term edge. Most legitimate prop firms offer scaling plans, a structured way to increase your capital based on performance. This is where traders can take a $25,000 or $50,000 account and grow it into six figures over time. But here's the key. Scaling plans reward discipline, not hero trades. Here's how to make them work for you. Study the rules. Every firm is different. Some require 10% profit over 2 months with under 5% drawdown. Others use milestones. Know your targets. Avoid overtrading. Scaling rewards smooth growth, not big swings, not lucky trades. Think long game. Doubling your capital isn't just about bragging rights. It means every 1% gain now earns you twice as much. Stay consistent. Some firms reset your progress if you have a losing month. So avoid reckless trades that might sabotage a 6-week streak. Reduce risk as you grow. Bigger accounts mean bigger consequences. Adjust your risk exposure and tighten your controls as your capital scales. Some firms also offer accelerated scaling if you overdeliver. So again, know the fine print. Withdrawals strategy, not emotion. Now let's talk about timing your withdrawals because this is where many traders leave money on the table. Most traders withdraw profits as soon as they're eligible. But what if your firm gives you 100% of your first payout and then drops to an 80-20 split? Wouldn't you rather hit that first $8,000 than withdraw it all at once? Here's how to be strategic. Time your big withdrawals right after hitting key milestones, like scaling or payout thresholds. Avoid automatic habits. Don't pull money out just because it's payout day. Make every withdrawal intentional. Keep a reserve. If your account drops below the minimum balance, you could lose funding. Don't drain it to zero. Use a calendar system. Align withdrawals with the firm's payout cycles, weekly, biweekly, or monthly. And always, think about your bigger picture. Are you compounding? Are you scaling? Or is this a payout phase? Compounding versus taking profits. So how do you decide whether to withdraw your profits or reinvest them into growth? The answer is, it depends on your goals and your trading conditions. When to compound? You're close to a scaling milestone. You want larger position sizes, and the firm allows it. You're on a winning streak with tight risk. You're aiming for performance bonuses or growth incentives. When to withdraw? You've hit a full payout threshold. You want to lock in profits after a big run. You're not confident in market conditions for the coming weeks. You want to diversify into savings or investments. A popular method? The 50-50 split. Withdraw half, compound half. That way you're building income and growth at the same time. Where traders leave money on the table. Let's talk about the common pitfalls because even good traders can mismanage payouts. Not knowing the rules. If you don't know when your split changes or how to trigger scaling, you'll miss opportunities. Withdrawing too early or too often. Small payouts feel good, but can kill momentum. Ignoring fees. Some firms pass on payment charges. Plan for them. Not reinvesting wisely. Your profits should work for you, whether in your trading or outside investments. Chasing losses. Don't let emotion turn a profitable month into a blown account. No journaling. If you're not tracking performance, how do you know when to scale or withdraw? Successful traders don't just trade well, they manage the business of trading. Broker-backed firms, a smarter way to grow. One way to level up your funded trading is to choose a broker-backed prop firm. Why? Because they often offer faster execution and better spreads, structured scaling plans tied to real market conditions, fewer limitations on assets and trading styles, and a more stable, professional infrastructure. One standout example is crystalballmarkets.com. Their prop program is designed for real growth with transparent splits, scaling, and capital access. If you're serious about turning trading into a full-time income stream, it's worth checking out. Final thoughts. Be a trader and a manager. Here's the bottom line. Prop trading isn't just about taking good trades, it's about managing capital like a pro. Use payout structures to your advantage. Understand scaling and plan for it. Withdraw when it makes sense, not when emotion tells you to. Decide when to compound and when to cash out. And partner with a firm that supports your growth, not just your execution. This is how traders move from earning a few hundred a month to building a long-term, scalable income stream. So treat your account like a professional portfolio. Set goals, track progress, and make every move intentional. You don't need to trade harder. You just need to trade smarter. That's it for today's episode of Financial Market Insights for Traders. I'm Sophia. If this helped reframe how you manage your funded account, be sure to subscribe, leave a review, and share this with your trading group. Until next time, stay disciplined, stay funded, and trade like a business.